Today on Forbes, Elon Musk's $1 trillion pay plan, the case for magical thinking. The only thing more outlandish than Elon Musk's demand for a $1 trillion pay package is the idea that Tesla's shareholders would grant it. And yet, that is how things played out, with everyone from massive investment funds to small individual investors approving compensation so vast the new pope decried it. It's a bet that lightning will strike again for the most successful U.S. industrial entrepreneur of the 21st century, that Musk can overcome Tesla's falling electric vehicle sales and his tarnished image by pivoting to AI-powered robotaxis and humanoid robots. With its stock already trading near an all-time high, at over 300 times projected earnings, many investors appear to think that's a foregone conclusion even before votes were tallied at Thursday's annual meeting. Brandon Earhart, Tesla's general counsel, told attendees that over 75% of shareholders approved the pay package. Gautam Mukunda, a professor with the Yale School of Management, said, quote, "Tesla's current valuation only makes sense if you attribute magic powers to Elon Musk. If you break out the new business lines he's talking about, there's no particular reason to believe that Tesla is the leading company for self-driving cars. Waymo's technology is clearly better. The only evidence that Tesla is the leader in this technology is that Elon Musk says so." The vote Thursday came at a fraught time for the company that kickstarted the modern EV industry, one that Musk also seems to be losing interest in. Tesla board chair Robin Denholm and CFO Vaibhav of Taneja argued in recent weeks that retaining Musk with stock that would eventually give him at least a 25% stake in the company, up from about 13% currently, is necessary for its long-term growth and stability. Yet it comes as his focus on the company, key to his wealth, is increasingly distracted by 5 other businesses, particularly xAI, his artificial intelligence startup, which will also get a cash infusion from Tesla if shareholders approve. Ross Gerber, CEO of Gerber Kawasaki Wealth and Investment Management, said, quote, "I like the direction of Tesla where it was. The direction he's chosen to move is a result of the fact that people won't buy his cars now." Gerber Kawasaki manages about $4 billion, including at least $80 million of Tesla stock, and voted against Musk's compensation package. Gerber added, quote, "I don't think Elon's taken any responsibility for the damage he's done to the company." While Tesla reported a 7.4% jump in third-quarter EV sales, it was a sugar high, powered by the phasing out of a $7,500 federal tax credit. Even with that increase, the Austin-based company's EV sales are down about 6% so far this year and expected to shrink about 7% in 2025, the second consecutive annual decline. In the US, Musk's high-profile support for President Donald Trump has undermined the Tesla brand's appeal in markets such as California, the biggest buyer of EVs in the country. Meanwhile, in Europe, his embrace of far-right politicians is linked to a double-digit percentage plunge for Tesla sales. China, which has been central to the company's profitability since 2020, is also a declining market for Tesla vehicles, as stronger, lower-cost local competitors, including BYD, Xiaomi, Xpeng, and NIO, chip away at its market share there. Aside from restraining his behavior, Musk's focus should be on developing competitive new products to beat back global EV competitors and focusing on bright spots within Tesla's current operations, its growing battery business, and EV charging services. Gerber said, quote, "I'm personally, and as a shareholder, unhappy that the company I invested in, because its main goal was sustainable transportation and energy to solve the climate crisis, has somehow been usurped into this useless goal of providing robotaxi rides, something that already exists, and robots. I want my company back. Tesla could be the most impactful climate-related company in history. Instead, it's pivoting into garbage." Gerber, who for years was an outspoken Musk fan, was hardly alone in his opposition to the comp proposal for Musk. Norway's sovereign wealth fund and public and union pensions voted against it. Proxy advisory firms Glass Lewis and Institutional Shareholder Services didn't support it. And even Pope Leo has come out against it. The Holy Father, in an interview last month, linked Musk's pay plan to the broader social ills of extreme wealth gaps. For full coverage, check out Alan Owensman's piece on Forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.